I would now like to introduce today's presenters. Michael Jansen, Chief Research Officer at Everest Group. Michael guides the practice's research agenda and architecture by leveraging his extensive experience to identify and unlock emerging trends. Shirley Hung, Vice President at Everest Group. Shirley advises senior stakeholders of global services, including enterprises, service providers, and investors, in their strategic mandates and initiatives. Vignesh Kannan, Practice Director at Everest Group. Vignesh assists clients on topics related to optimizing business process service delivery models, go-to-market strategy, peer assessment, competitive intelligence, and future investments across industries and geographies, with an emphasis in finance and accounting, procurement, and supply chain management. And with that, I'd like to turn things over to Michael.
All right. Thank you, Matt. And I wanted to start today with a conversation about how people were feeling as they went into the very beginning beginning of the year, so 2021. What were they thinking about? And we did a quick poll results just a few weeks ago, and we're asking about how they felt about the upcoming year, and how they thought their financial results and how optimistic they were. And the overwhelming answer was they were thinking that 2021 is going to be about the same as 2020. A few thought it would be worse. Many people thought it'd be better in the second half. But I have a slightly different perspective here. I think, wow, certainly the COVID has been a devastating impact on some of our personal lives and people that have been touched directly and indirectly. But if the results of the COVID are really, the vaccinations are really 95% effective, I think we are going to have a fantastic second half of the year. Now, I don't know if that starts in May. I don't know if that's in July. I don't know if that's in September. But I do think that we are going to have something what we're calling pent up optimism. And there's a sense that the tension's building. And I want to make sure that as we go into this webinar, and as we're thinking about 2021 as a whole, not necessarily the next few months here, but as a whole, I think we're going to have a very optimistic view of where we will be, and we're going to have a fantastic second half of the year. So with that, let's look at where people stand right now and talk about some of those numbers where CFOs are thinking about right now. And what you're going to see in both these sets of numbers here is certainly disruption in many businesses. Now, not all, and you're going to see at the bottom there on the bottom right-hand corner is some businesses actually thrived and were actually accelerating revenues. And I've actually talked to, I was talking to a CPO the other day at a firm that provides devices for the medical community, and their revenues were up like 30%. If you're in travel, looking pretty bad. If you're on online commerce, you're doing really good. But I think, you know, we can't use 2020 in the results that we had there as a pattern for what we look forward here. And so with that, I think 2020 was a lesson in things we need to do to get our house in order. And it did force us to enable about thinking about how we're going to accelerate. But I think as Shirley and Vignesh go through the numbers here, what you're going to see is CFOs are taking this crisis, if you will, looking at it as an opportunity, and really thinking about what they need to do to buckle down and be prepared for that pent up optimism that I think we'll see in the latter half of this year.
Thanks, Michael, for setting the context. You know, the purpose of the webinar here today is to talk about FNA and specifically FNA outsourcing. And if we look at, you know, the past, finance organizations really focused on delivering business value by driving down costs, improving process efficiency, and meeting SLAs. And they did so through traditional levers such as shared services, labor arbitrage, and Six Sigma. But in order for companies to remain competitive in today's hyper dynamic environment, they really need to focus on delivering against a broader definition of value. They need to impact the top line as well as the cost base. And they need to leverage next generation digital tools and technologies such as intelligent automation, as well as advanced approaches such as design thinking to generate that business value. Future-ready organizations are those that are agile in adapting to changing environments. They can act with speed through robust decision-making. They're resilient to any business continuity challenges that may come along, and are digitally enabled, as this provides the foundation for organizations to being able to deliver on all of these promises that I just mentioned. So in the short term, our research has said that CFOs are focused on implementing work from home models. Traditionally, FNA has been a function that has been reluctant about allowing remote working outside of an office environment on a routine basis. But however, with the pandemic, as with any other functions, CFOs are realizing the value of having to work from home and have that be part of their permanent delivery model from a business continuity planning and risk mitigation perspective on a go-forward basis. But work from home can't work without digital enablement. And increased digital adoption is really not just about managing the distributed workforce for FNA. It's also about improving productivity, stakeholder experience, and controls. And given continued uncertainty about management and control over the pandemic, CFOs are also rightfully focused on improving liquidity in the short term. And this goes back to some of those kind of expectations around revenue impacts and so forth that Michael talked about earlier. Interestingly, our research also reveals that nearly 50% of CFOs have lower confidence committing to short-term investments in the near term, as opposed to longer-term investments. So this perspective really reinforces the high sense of uncertainty that businesses are continuing to struggle under. Looking forward, CFOs are prioritizing business continuity planning and reevaluating their location strategies. They're also recognizing a need to drive large-scale transformation initiatives in order to future-proof their organizations. Of course, with that, it's going to really depend on their investment appetite. And as I kind of mentioned before, in the previous slide, there is a little bit of a reluctance to commit to that straight away, but they do recognize the need to do so on a longer term basis. So the challenge is to be able to deliver and plan against that while being able to meet those kind of that investment appetite, or the limited investment appetite, at least in the short term. And with all of these changes, the FNA function must also ensure that their compliance and controls remain relevant and fit for purpose, to manage against any new risks that might emerge, for example, through this distributed workforce model. And as a research firm, focused on services, it's really interesting to see the data here on this slide regarding changes to the FNA operating model. Currently, 2/3 of organizations leverage shared services and or outsourcing in FNA, with 1/4 of all organizations leveraging both. And of the 24% of organizations that are currently only leveraging shared services, they're also increasingly open to a hybrid model by partnering with third-party service providers, with over 3/4 of those organizations considering outsourcing. So one thing that the pandemic has done is really force organizations to reconsider their status quo and push for what is possible. And over half of the organizations in our study that are not currently outsourcing is open to FNA service provider support in the future.
Shirley, when I look at this data here, it really points to a lot of different options that people are considering. It's not one, heavily leaning toward any one specific operating model.
That's true. And that reflects that kind of open perspective. I think what is consistent from 2020 is that people realized their status quo was not sufficient, right, for them to manage against those unforeseen challenges that came up from the pandemic. And so that's really forcing them to think about, other means to be able to mitigate those risks in the future. FNA, as we know, is one of the more mature business process services areas. And as such, expectations for the role that FNA service providers can play is also naturally higher. FNA service providers are no longer expected to be just responsible for ongoing operations. CFOs are expecting strategic involvement from their FNA service providers in areas such as designing their transformation roadmap and executing those transformation plans. Additional priorities for service providers are to leverage data and analytics to drive actionable insights in achieving process excellence within FNA, as well as generating insights that will create business value. We'll be talking more about data and analytics in FNA later in this webinar. But the need for FNA outsourcing, or as we call FAO, we'll be using those terms interchangeably through the rest of the webinar. The need for this is evolving and becoming more strategic, especially as organizations are looking for support and assistance to future-proof their organizations.
All right, great. Let's open it up to folks and get some direct input from the audience participants. And so we're going to do a quick poll here. And the question is in your opinion, how can finance teams support your business in 2021? And so there are a number of options. Choose one, and then we'll show you the results here immediately. All right, I'm looking at the answers here. No clear leader yet. Lots of we got a horse running out here a little bit in front. Okay, we'll leave it open for another 10 seconds. Okay, we'll close it off right now. Great, thanks for voting. All right, so let's share the results there. Can everybody see those? Are we sharing the results?
Yes, Michael, we can see.
Okay, great, fantastic. So what we see there is really driving that proactive initiatives to be future ready really ran away at the end there. Of course, you can look at the number, kind of everybody choosing some of the different options. Reducing costs isn't always going to be a fan favorite, if you will. Reassessing the business strategies isn't important for some businesses. They're really looking at how they got to do things differently. So anyway, a good perspective, but that future ready theme is clearly out ahead of everybody else. All right, so with that, what we're going to do is we're going to take you through 3 sections here, and so we're going to talk a little bit about the digital and data, and we're going to talk about what people are adopting. We're going to talk about specifically how in the FNA outsourcing market, what the size and how the market's moving, and then we're going to talk about specifically about service providers. So with that, let's jump into some of the detail here.
Great, thanks, Michael. As I mentioned before, digital enablement is a top priority for finance organizations as they look to future-proof their businesses. Much has been talked about digital's ability to drive process efficiency and effectiveness through tools such as automation and approaches such as analytics. And within FNA, it also enables self-service through vendor and customer portals, as well as improving interactions through the use of chatbots. As I mentioned previously, organizations that expect to have a portion of their workforce permanently based at home must leverage digital technologies to ensure data security and access to systems and other infrastructure. Digital also is vital for improving workforce productivity and effectiveness through communication and collaboration tools and other types of HR related systems. Up next, Vignesh will be diving deeper into digital and data within FNA outsourcing.
Thanks, Shirley. So as Shirley mentioned, we all know that digital has a vital role to play in finance organization, and digital has now become more of a table stakes from a outsourcing standpoint. Like I couldn't see any outsourcing contract without any digital component in it, right? So the sophistication and the degree of inclusion of different digital levers varies from contract to contract, depending on multiple factors, say maturity of organizations. But if you look from a supply side, right, service providers they have been investing in different digital levers for a while, and I would say service providers are slightly ahead in terms of digital investments. Now, if you look at different investment themes in couple of years, the traditional broader areas that they invest, right, in areas like data, analytics, artificial intelligence, automation has been there, and it continues to be the top investment themes in the recent times as well. But what has changed or what has improved in terms of investment is they have been increased their investment in process related, talent related, domain related expertise to further contextualize the digital investments that have made to the FNA context and to the specific industry context, right? And another interesting theme that we have seen is the COVID-19 disruption induced themes, right? So the disruption has forced service providers to develop solutions and invest in specific use cases that was triggered by COVID-19 situation. If you look at some of the examples revolve around how to enable remote workforce and how to enhance cash flow or liquidity management solutions. And with these investment themes, if you look at what are the different routes that they are taking to invest, and it shows a very good, healthy mix of both organic in-house investment and also inorganic routes, primarily through partnerships, strategic alliances, or mergers and acquisitions, right? With a slight leaning towards partnership and acquisitions. Primary reason being, there are already best-in-class solutions available in the market, and it doesn't make sense for a service provider to develop similar solution right from the scratch. And also it enables faster speed to market for service provider. And if we move on.
Yeah. So what Vignesh just took you through was where suppliers are investing. If you want to look at it, what's actually showing up in deals here, what we're going to see is automation is showing up in the vast majority of deals. So you're going to see it's significantly over 50% in 2020 from our estimates. And if you look at 2022, it's expected to grow even on an increasing amount. So automation is key to driving down cost, the accuracy, process improvement, consistency, all those good things. Number 2 and 3 were nearly tied in terms of showing up in deals right now, analytics and mobility. We see analytics is actually going to be one of the most significant aspects of new deals going out for the next couple of years here. That having that data, having the availability of that data, driving insights, that all becomes key. So if you think about driving transactional and the automation, but then also having the insights and the ability to act on that information becomes absolutely critical. I don't want to ignore the last component on here, AI. AI is as an increased level of sophistication. Think of it as being able to help to further sophisticate the automation and further sophisticate the analytics. That takes on specific industry context and will take longer to develop, but I don't think it's something we want to completely ignore here. I think it will be part of driving further intelligence to all of the above in this list.
Okay, with this in context, right? The data and analytics as the one of the top key investment themes from a service provider perspective. And we have seen increasing adoption of analytics, as Michael mentioned, in outsourcing contracts, right? Let's double click on what is data and analytics from FNA context, and it also in the broader business process services context, right? If you look at the end-to-end data and analytics value chain, the typical analytics and insights component, right, which ranges from basic analytics of your basic reporting and dashboarding of charts, pie charts, bar charts, to more sophisticated insights or analytics leveraging, say, artificial intelligence, advanced analytics to predict and prescribe actions, right? So this broader analytics and insights component is typically owned or handled by the business process services or the operations team. But also the more important is the broader data management component, which ranges from devising a data strategy for the entire organization and also designing policies around governance and security, right? But this data management strategy and governance is typically owned by or handled by the IT department or IT function within the organization. And in the last, say, 12 to 18 months, we have seen increased demand for analytics or insight-based solutions or offerings. And we have seen increased investment as well. Now, if we move on to the next slide. Yeah, the primary driver or the reason behind the increased demand for the analytics or insights component is driven by the demand side, right? What CFOs are expecting, and their expectations have evolved drastically, and from a staff augmentation or a productivity to how can I think about impacting business decisions, right? And this expectation is further accelerated by COVID-19 disruption. And if you look at some of the top expectations of CFOs from their third party or a service provider, it really falls into 2 or 3 buckets, right? One is how can I improve the visibility, or how can I bring in transparency to the huge pile of information that resides within the organization, and how can I leverage that information to make a decision, not just in a better way, but also in a faster way. And also, how can I use these insights to impact my business metrics revolving, say, cash flows or liquidity. And CFOs expect their service providers to not just bring in insights to the table to enable their broader to achieve their broader business objectives, but also use those insights in a continuous loop format into their operation and process to further improve the finance function. If we move on. Yep. With increasing demand for insights, and a lot of analytic solutions are coming up, ranging from sophisticated visualization to predictive and prescriptive analytics. But a lot of organizations who are making these investments in the so-called insights layer or the analytics related tools were not able to generate expected ROI from their analytics investments. It's the key reason behind that is there are a lot of concerns around data management, and we'll explain a bit more about it, right? So the data management or a good quality data forms the key for good insights, right? And if you look at from a finance context, finance function sits on a huge amount of data ranging from, say, on the payable side, there are a lot of data that revolves around suppliers, vendors that they are dealing with. On the order to cash or accounts receivable side, they are dealing with a lot of data around their customers, the billing, and also on the record to report or the accounting side, they have to deal with multiple regulatory bodies and government, and also prepare multiple reports for their stakeholders. And all this information, some are in a templatized standard structured format, and some are in an unstructured format, and these come from multiple sources, right? And managing these data becomes crucial to form a good quality insights that analytics engine can generate. So the FNA service providers have been investing heavily in building a solid data management practice. Focusing on building a sort of a centralized data hub which primarily revolves around how do I streamline the data that resides within the organization into a usable format, right? How do I manage the data properly? And more importantly, how do I do this on a continuous basis? Because the data that resides within the organization is going to grow exponentially, right? So there's been huge investments going on data and management side as well, and providers are starting to look at data and analytics not just as an analytics component that resides within the BPS, but also more from a end-to-end data management and analytics and insights perspective.
All right, so we've taken you through a lot of contextual background to this marketplace. Now let's move into the fun part. Let's move into the rack and the stack of the data, and let's see what's actually happening in the outsourcing marketplace here. Shirley, walk us through how fast are we growing? What are we doing?
Thanks, Michael. Despite the challenges posed by COVID-19, 2020 was actually still a growth year for FNA outsourcing. And given what we've shared earlier in the webinar around elevated expectations for FAO service providers and an increasing openness for organizations to consider outsourcing as a lever, the figures that we're showing here on the slide really shouldn't be all that surprising. On an annual contract value standpoint, FAO is around $10 billion, and we are estimating that the market for FNA services will resume to pre-COVID-19 growth levels of around 7 to 11% per year to reach around $11.5 billion by 2022. And part of this growth is really being fueled by increased inclusion of judgment-intensive processes in FAO contracts, as we're seeing here. COVID-19 has increased expectations of buyers for their service providers in terms of partnership in strategic areas. They're increasingly open to outsourcing more high-value FNA processes, such as those within financial planning and analysis, tax, and treasury. And we really do expect that this trend will further accelerate in 2021 and 2022.
So what this is telling me, Shirley, is you're getting a huge amount of deals now focused on things that go way beyond the transactional layer.
That's right. More organizations are definitely looking towards third-party support for their end-to-end finance processes.
Yeah, with a lot of change kind of just showing up here just in the last year or two. So I think that will continue on, especially when we add in the automation layers.
Yeah, another factor that is contributing to this, growth in the finance and accounting outsourcing market is from a geographic scope expansion perspective, right? So organizations who have outsourced operations of, say, particular one region or one country or one continent are now comfortable including other regions or scope into their outsourcing contract. Like, as a result, we are seeing more global deals as compared to local or regional ones, right? The other day, I was talking to one of the large media company where they were mentioning, they have outsourced a particular region, and seeing the service provider performance during the COVID-19 crisis, that has actually created a clear business case for why they should include other regions as well into their outsourcing contract. Right? So going forward, we would expect more global deals as compared to local regional ones. Yeah. Another interesting fact is that, few years back, the outsourcing market was predominantly dominated by large organizations, right? Only huge global organizations used to outsource. But of late, I would say in the last 2 to 3 years, we are seeing increased interest from mid-sized and small-sized buyers to engage a third party in their finance activities. And this is primarily due to a couple of factors. So one is there are a lot of modular solutions available in the market, which require very limited upfront capital investment. So mid-sized buyers are comfortable in engaging in that. So some of the solutions around as a service model or automation as a service and solutions that require limited investment, right? Other factor is that on the supply side, service providers are now coming up with more innovative commercial construct beyond input-based pricing, which is really appealing to mid-sized organizations. Now as this goes on, we would expect more medium-sized and small-sized buyers to choose outsourcing as a potential option to run their finance function. So from a process scope perspective, right, earlier only transactional processes within procure to pay, say accounts payable or accounts receivable, were outsourced, but with service providers developing strong capabilities across end-to-end value chain, as Shelley mentioned, including the judgment intensive processes. Now our enterprises are comfortable outsourcing their end-to-end value chain. Of course, the degree of outsourcing within each tower varies depending on the comfort level and the maturity of the organizations. And this is reflected in the global FTEs who are delivering FNA services from a third-party perspective, right? And if you see, the split is almost equal, 1/3 in each of the towers, which is a clear indication of that. There is a lot of outsourcing activity across the end-to-end FNA value chain, not just focus on, say, payables or invoice processing transactional activities. And one interesting trend that we are seeing is there is increasing activity from first-gen outsourcers who are interested to outsource their finance function in the last 2 or 3 years. And this is primarily triggered by the success that they have seen with their peers. And these interests, the first-gen outsourcers typically start off with the transactional procure to pay activities, and then they move on to expanding further scope, both from a process and geographic perspective. And that has resulted in a very high growth in procure to pay FTEs, despite the fact that there is a huge automation play in that area.
All right, so webinars are a one-to-many conversation, and we enjoy doing them, but we also really enjoy having a one-to-one conversation. And so we're going to open up a quick poll here. If you're interested in having a one-to-one conversation with Shirley and Vignesh and the rest of their team on one of these topics that I have highlighted here on FNA outsourcing, if you're a provider and you're thinking about your planning for 2021 and you think that a conversation with Shirley and the rest of her team would be good, just check one of these here, and then we'll be in touch and follow up with that. So we'll leave that open for another 5 seconds here. But if you're a provider in this marketplace and think a good conversation would be warranted, that'd be great. We'll have a separate offer here for enterprises. This one is geared mostly towards service providers. All right, thank you. And let's move on to our final section here. And what we're going to do is talk about now the service provider landscape. And so with that, let's talk about our peak matrices, and that's really where we focus in on how we see the marketplace supplier by supplier. And Shirley, tell us what you see.
Yes. So on an annual basis, Everest Group conducts an assessment of the FNA service provider landscape using our peak matrix methodology, where we relatively plot service providers against the y-axis of market impact and the x-axis of vision and capability. Our latest assessment is shown here, and it includes 25 service providers where the leaders group comprise of the likes of Accenture, Genpact, TCS, Capgemini, IBM, Infosys, and Wipro. We've also called out 5 star performers, which are service providers with momentum. They've made the greatest strides on both axes compared to our previous year's assessment. So for star performers of this past assessment, those include TCS and Infosys. who have solidified their leadership position within this marketplace, as well as EXL, WNS, and Cognizant, who are major contenders that are actively closing the gap to the leader group.
So Shirley, I think it's fair to say that there's certainly clustering up there of well-known names in the upper right, but you should also be looking in if you're in a specialized industry or looking for specialized capability, you can find that with many of these others that are dispersed through the chart here. So I would encourage you to think about not just those upper right, but some of the others for more niche needs.
Absolutely, absolutely. You know, our assessment is really looking at kind of a broad set of needs, including, you know, capabilities across many geographies, many industries, but that may not be what you need as a buying organization. And as we're going to talk about through some of the other slides, you know, generally speaking, the buyer feedback for the FAO service providers have been pretty consistently positive across the entire spectrum of service providers that we're showing here, and not just for the leader group. So they have the capabilities to meet your requirements, particularly in areas that might be a bit more specialized for what you're looking for. So when we are looking at the service provider landscape, it is important to note that leaders dominate the FAO market, and they account for more than 65% of the market share. So on a global basis, Accenture, Genpact, and TCS, they're the top service providers across all geographies. From an industry vertical basis, Accenture has that scale across all major industry verticals, but Genpact and IBM also has a significant market share as well across many industry segments. You know, one thing that I just mentioned, you know, by definition, the leaders are the ones that are performing better than others across all our assessment parameters. But if you look at the rest of the field, despite their smaller scale, they're still delivering significant value for their clients. And we're seeing this through their positive client satisfaction levels, where feedback is similar across most dimensions of client satisfaction for the leader, major contender, and aspirant groups. So on a whole, the FNA service providers are performing well. They're supporting their clients really positively. And in particular, when we ask them about their performance through the pandemic-related disruptions, broadly speaking, clients have been very satisfied with that level of support.
Yeah, Shirley, if I was to add to that, you know, we did a different analysis. We actually talked to people about their satisfaction of their service providers in the pandemic, and only 8% of them showed a level of dissatisfaction. So the other 92% were really very satisfied or satisfied with their partners in this process. And that makes me very proud of this industry, having been involved in this for 3+ decades. Nobody could have predicted the pandemic and the fact that, yes, there were some challenges, and nobody was, you know, 100% bulletproof on this, and we would have never planned for the extent of this thing. But for a large part, we actually got through this pretty darn well.
Yeah, absolutely. And I think that, you know, what we've seen as well is that those organizations that have outsourced tend to fare better than those organizations that kept a lot of the work in-house. And I think that that is also one of the reasons why organizations are increasingly open to outsource, like first generation outsourcers now, is that it's being seen as a really valuable risk mitigation tool too.
Well, and we also got to test the definition of what partner really meant.
Yeah.
So.
All right. So as I mentioned previously, leaders continue to hold more than a 65% share of the FAO market. They're strengthening their market position as compared with the previous year. They're growing in the double digits range compared to the 5 to 7% growth for others. And we anticipate that they'll continue to be drivers of the FAO market going forward. Considering the leader's significant existing scale that they were working from, this continued growth is really a great achievement. But it's being driven by new, larger scale transformation deals, as well as scope expansion in existing deals. And frankly, there's, to Michael's point earlier, there's plenty of opportunity within this overall marketplace for service providers that are focused on delivering against their client needs to continue to grow and expand their business.
Yeah, and if we look at delivery from a location standpoint, again, what service providers are where they are delivering from, we are seeing increased investment in nearshore and onshore locations, right? And we have specifically given the data till 2019 because 2020 is a year of disruption and a lot of things happen. I'll come to that point, right? So as Shirley mentioned earlier in one of the sessions, right, there is a higher inclusion or openness to outsource or engage a third party in a judgment intensive tasks like treasury or financial planning and analysis, right? So these processes require understanding of the regional nuances and closer client proximity. So to cater to these needs, service providers have increased their focus of delivery from nearshore and offshore locations. And apart from the top 5 new FNA delivery locations that you're seeing on the slide, service providers are also expanding their existing delivery centers in tier 2 and tier 3 locations across onshore, nearshore, and offshore delivery. Now, this is the picture in the pre-COVID scenario, right? Now, in 2020, we all know that the entire service delivery model went for a toss. Everyone's working from home, delivering services remotely. Now, what can we expect going forward into 2021 is that from both supply side and buying organization side, we are seeing more openness to hybrid delivery models, and there are investments to enable work from home on a permanent basis. And going forward, we'll see some of the onshore and nearshore delivery will be replaced by remote work from home model, right?
Yeah, I think one of the things we observed here was everything was on the table in terms of locations and the ways to do business, and the whole work from home. Everything was on the table. People are actually going back and actively evaluating whether they need to make changes.
Yeah, and diversifying the locations portfolio is one of the top priority in enabling the business continuity plans for most organizations. Okay, and this is a very interesting trend, right? Looking at what is the average contract length of an outsourcing contract, and this again from a FNA context is decreasing over the years. Primarily because of a couple of reasons, right? So there is a lot of interoperability among different solutions that different service providers are bringing in. So that reduces the switching cost. Also, the service provider landscape is evolving in such a rapid way that buying organizations do not want to commit to a particular service provider for a longer term, right? Even if they are comfortable with the value that the service provider is providing, they want it to be a shorter contract followed by say multiple renewals, and we expect this trend to go forward. Yeah, coming to one of the interesting concepts or asks from an outsourcing perspective, right? How is the pricing or the commercial constructs going to evolve? Now, we have talked about multiple values that outsourcing can bring in, and a lot of changes that is happening from a FNA outsourcing landscape. So the value proposition of the outsourcing as a solution is shifting from pure staff augmentation to productivity to impacting business metrics, and that is clearly being reflected on the commercial constructs that we are seeing on the market as well. As you can see, the share of input-based pricing or FT-based pricing is decreasing with more inclusion of transaction-based pricing and hybrid pricing model, right? So hybrid includes an outcome-based pricing model such as gain sharing. And to be frank, at this point, or even in the next 12 months, we are not going to see a contract with pure outcome-based model. So I would say still it is in the nascent stage, but we are seeing a lot of contracts with outcome-based and output-based being included in conjunction with input or FT-based pricing model. So going forward, we'll see more inclusion of more innovative commercial constructs in the near future.
Thanks, Vignesh. And to wrap things up, buyer satisfaction, as I mentioned before, really is a key component to our analysis. We asked buyers about the relative strengths and areas of improvement for their service providers. And overall, the top areas of strength mentioned by enterprise buyers are their service providers' collaborative partnership and relationship management capabilities, operational excellence in terms of domain expertise, service quality and execution, as well as agility and proactive communications. Whereas areas where service providers can look to improve include, staff turnover and knowledge management, process improvement and technology innovation, and proactively implementing best practices. However, that being said, as I stated earlier, the FAO service providers that we've covered in our assessment have been receiving pretty positive client feedback on a whole. And it's really great to see that FAO service providers are serving the needs of their clients, because this really is one of the primary drivers for continued growth for FNA services.
Okay, so we've gone through not only the background and context for what's going on in the CFO agenda. We've talked about the deal sizes, and we talked about suppliers. We've done it in a one-to-many. If you're an enterprise and you would like to have a one-to-one session with Shirley and Vignesh and the rest of their team here, I'm going to open up a poll here. You can just click on the poll, and we will be in touch. If you're interested in getting one of our peak matrix segments. So Shirley showed you one of those earlier. We have many, many more segments, so we break it down into much more detail. If you're interested in one of these and would like to understand more about the suppliers and some of the models and the insights we can provide about those key vendors, and you're an enterprise, click the link there and we'll be in touch with you to make sure we get to a conversation on that. Okay. All right, fantastic. With that, we have several pages of questions here, and wanted to delve into those and see if I can stump Shirley and Vignesh with a question they can't answer, but I think they'll be able to. Let's start with one here about innovation. And Shirley, I'm going to put this one to you since you've been on the buy side for much of your career. How satisfied are CFOs with the level of proactive innovation from their FAO service providers, and how is this embedded in their partnerships and contracts? This has been a timeless conversation. Once you answer it, then I'll give even a different perspective.
Yeah, I think I addressed it a little bit in that last slide. It is continues to be an area of improvement that most buyers want, that proactive ideas from their service providers. They really believe that service providers have that broader perspective and can, take the learnings that they've established from multiple, serving multiple different clients, and be able to apply that for their behalf. And so I think the reality is that this is always going to be an area that they're going to want more of. However, that being said, I think there is definitely room for FAO service providers to improve in that space. Now, the second part of that kind of question around partnerships and contracts, I think if you've spoken to our CEO, Peter Bender-Samuel, he'll say that innovation cannot be managed contractually, right? It's really kind of difficult and impossible to do so. I know that there's organizations out there that have done certain things like establish innovation funds and those kinds of things. And they do work to some degree, but ultimately it comes down to the strength of a relationship between the enterprise buyer and the service provider, and having a little bit of a risk mindset, right? To be able to know that a lot of innovations fail before one succeeds. And so that requires a partnership as opposed to kind of finger pointing if something fails. So the short of it is that there's still a lot of room. This continues to be an area, even in FAO, that's cited as an area of improvement. But that being said, I think it'll always be an area of improvement.
Yeah, so let me reemphasize that. Having been part of this industry for 3+ decades, and I'll just leave it at that, from all sides of it, this innovation has traditionally been the #1 issue of the longer term challenges for outsourcing contracts and outsourcing relationships between buyer and service provider. What happens in these deals is they get established based on a plateau or a set of objectives, and people get focusing on that and they perform very well. They take it from where it was to where it needs to be in the contract. But then as the deal and time moves on and the market moves on, often those contracts get left in kind of concrete, and they get left in a place of where they started and not where the world has moved on to, whether it's the opportunity in the marketplace or where the customers moved on. And so I will agree with Peter on this one, is that it's not something you can put in your contract, and it's not something that's going to be free, but you have to have both parties recognizing that this is a longer term challenge in this industry and that you've got to work extra hard to do it. And you want to make sure that you have processes and governance and mechanisms in place to refresh, if you will, your status quo of where you're at today, and bring in new teams, bring in other points of view. Sometimes you have to do that through contractual processes, and sometimes you can do it through just relationship processes. But those things are all required, and it is a longer term challenge. And I'm not going to say it's unique to FNA. It's been involved in every deal that I've been involved, or it's involved in every aspect of this industry for the past 3+ decades, and I don't think it's going to go away. So I don't want to be negative there. I just want to be a realist in that conversation. How about another question here? Vignesh, I'm going to come to you on this one. Can you help tie the slide? It says 29 there, on the increase in onshore and nearshore to the increased use of global delivery of services shared earlier. I'll go back to my statement around everything's on the table, but look at it from the stacks of data that you look at.
Yeah, so to tie back these slides, right? So one is we are talking about there is more geographic expansion happening in terms of scope. For example, only US operations were getting outsourced. Now, in the same contract, Europe is also getting included. And that is tying back to increase in onshore and nearshore. So if I take this US, Europe as an example, specifically from a FNA context, Europe region has a lot of complexities around regulations and tax-related regional nuances, right? So unless there is a delivery location that is there in the Europe, buyers are not comfortable outsourcing. And if we take, say, other geographies like Japan or even countries within Europe, there are language dependencies as well. And there is cultural dependency as well. So once there is a delivery center that a service provider has set up in a particular region, that is that it introduces a cultural alignment, client proximity, takes care of regional nuances, and hence the geographic expansion and expansion of nearshore delivery goes hand in hand.
Everything's on the table. All right. So Shirley, I'm going to bring this one to you, and I'm going to provide a comment first here based on the longevity I was talking about. Why has transaction-based pricing not increased in FAO contracts, given that many activities outsourced are transaction-based? And I'm going to give a long-term historical view. Back in the day, almost all transactions, all outsourcing deals were transaction-based. They were based on claims processing, where they included the labor and the compute technology. You could have had airline processing, you could have had banking services, all those things were transaction pricing. I would suggest that we went to labor-based pricing only around the time that India and other offshore low-cost locations came into play, and people were just eager to get the advantage of low-cost labor. So are we going back to the future, or what do you think?
Yeah, I think that's an interesting question. Vignesh is a lot closer to the detail on the data, but ultimately, I think this is a reflection of the expanded scope that are now being given to FNA service providers. And so on a absolute basis, it could be that there's more transaction-based pricing being part of a contract, but because they're also, organizations are also seeking support for judgmental type of processes, and that's kind of more defined by perhaps outcomes as opposed to transactions. We're seeing that big growth in hybrid type of pricing models. So transactions might be one component of that, FTEs or fixed price might be one component of that, and then outcome-based pricing might be one component as well.
Yeah, I think the when we start adding in the automation and the need or the opportunity for automation in this segment, I think that is completely at odds with the FTE-based pricing model. You don't have an alignment of interest when you're pricing based on how many bodies can you employ or have it designated to support that versus the need to automate, which is actually inherently driving down the number of bodies, which is not necessarily going to be in the supplier's best interest if they're FTE based. So I think ultimately we do need to get back to transactional and related, output, not necessarily outcomes, but output based transactions is a much better way in the long term, and it supports the value propositions of beyond just, hey, I can get labor cheaper somewhere. All right, let me find one more question here. And Vignesh, I'm going to let you try to jump on this one here. Is there an expansion of FNA outsourcing to smaller corporations, markets, including SME? And if yes, what is the minimum turnover size today? What's the small end of the market look like from your perspective? Or smaller?
So small end of the market, I would say, yeah, I would say it's less than $1 billion is how we define SMB. But if I have to take the lower end, I've seen organizations with, 2 million or 5 million in revenue, US dollars, are choosing outsourcing as an option. But one nuance I would share is these smaller organizations do not go for just FNA outsourcing. There will always be other towers included. For example, it would include some voice-based outsourcing. It would include some business processes. So if you take smaller insurance companies as an example, right, it would include some industry-specific PPO operations, the underlying finance operations, and the voice services associated with this. This is more of a broader business process transactional outsourcing rather than pure FNA outsourcing deals.
All right, fantastic. All right, that's all the time we have for questions. There are many more on the that were submitted. We will endeavor to be in touch with you to answer those questions and discuss those. If you have other questions that you want and would like to send us an email here, certainly feel free to reach out to us. And for those that said that yes, they'd like a conversation with us, we'll certainly try to make sure those happen in a timely fashion. There are other resources up on the web that you can get to us on our blogs, see some of our points of view on these things. And also there is a lot of content. And so if you are interested in this, there's just a sampling of some of the stuff that we have published on this subject. As you can tell, we go deep in here. We love it and we're passionate about it. So feel free to reach out, and thank you for your time today.
Thanks for your time.
Thank you, Michael, Shirley, and Vignesh, and thank you everyone for attending today's webinar. Again, you'll receive a follow-up email within 1 to 2 business days with a link to download the presentation slides along with accessing the on-demand playback of today's live session. On behalf of Everest Group and our presenters, thank you for joining us today and have a great rest of your day.